I know sometimes when you're dealing with learning everything financial, what do I do? How I invest my money? Should I do an IRA, a Roth IRA? You hear all these acronyms and terms, and you're just not for sure what to do, right? So, this is just kind of a basic understanding of what traditional and what a Roth IRA looks like, right? But one is pre tax, one is after tax. Contribution is the same. So if you're 49 and younger, you can put in 6,000. If you're 50 plus, you can put in 7,000. Right? So that's great to know, because what if you started off a little late? Say you started your business a little later in life and you don't have your retirement account. This is a good way you can start an IRA even 50 plus. They just allow you to put in more, right? Taxes. That's a big thing we need to really understand when it comes to taxes. One is tax deductible and one is tax free with withdrawals. So that means with the Roth IRA, later in life when you are older, right, and you probably need more of your money, more so, you're not you're not paying taxes when you take your money out. So that's important. Know if you save a million, your tax bracket about 50%. So literally you don't have a half a million, 500,000, because half of it will go to taxes. So know that. What's going to be best for you in your situation? Like these are your rules, kind of like the baseline of what, these are the rules and that's how it's set up. But is that what you want? Figure out really what you want to do, but know the information, know what's going on. Let you know that what the income limits mean, and with the traditional, there's no income limit, right? There's no limit to it. But if you want a Roth IRA, they're saying if you're single, look, you're going to have to make 137K under, or if you're married, filing jointly, 203K. That's what you're looking at. So you got to really figure out where you fit. When it says minimum distribution, they require that you take a certain amount of money out every year. That's just a requirement. You have to do that. And so these are the rules, right? Withdrawals pre-retirement. This is for retirement. This is not designed where if I need to take money out, I have an emergency. That's what your what if account is for. Your what if account, you should have about 3 to 6 months of your monthly expenses. So if I lost my job, I got sick, I got hurt, I know that I have at least 3 to 6 months to survive. I can pay my mortgage, I can pay my rent, I can pay my car note, I can have food, you have that set aside. So if your monthly expenses every month is $2,000, and that's your survival number, meaning if life happened, that's what I know this is what I can live off on, right? That's minus piping Netflix and eating out and things. But if you still want to maintain your lifestyle, you by all means do so. If you want to say, if I ever lost my job, got sick or hurt, but I still want to maintain my current lifestyle today. So if your number is not 2,000 and my number is, I spend $4,000 a month, then 4 times 3 or 4 times 6, that's what you're looking at, that you need to have set aside. But this is saying when you retire, or you saying, look, before I retire, I want to take some of this money out of before 59 and a half, pretty much. That's what you're saying. And you want to withdraw this money, you're going to pay a penalty of 10% if you decide to take this money out before retirement. Yeah, something happens and life happens. Just know there will be a 10% penalty. Plus, you got to file this on your tax return as income. Please talk to a tax professional. Understand, anytime you take out monies out of a retirement account, there will be penalties, there will be taxes that you have to pay, and understand that. So a lot of times your money will be eaten up with penalties and fees. So make sure, is it really worth it? Or maybe you should just have some liquid cash set aside, in an account in the event when life happens. That you have those monies. But this is just a basic way of looking at Roth IRA and a traditional IRA. But these are things that are great. My business owners set one up. If you feel like, because there are other things out there that maybe you don't qualify for, but these are two mostly everybody can do. There's no health questions, there's no restrictions when it comes to, most, if you got the money, for the most part, you can start them off with at least $100. Um, and that's pretty much it. If you want to dump in, the whole amount all at once, say you got $6,000, that's the most they allow you to put in for the year. Or if it's 7,000, depending if you're a little older, if you're 50 plus, then you have 7,000 you can put in, but you can only do it yearly. So this is your baseline to really understand the difference between Roth IRA and a traditional IRA. What's going to be your money moves today? Know that you're not your financial mistakes and you can rise above. Have a good one.